Hi, this is Jim Trippon, Editor-in-Chief of China Stock Digest with this week's China Stock Market Commentary. Who's that in China's rearview mirror? Well, unfortunately, it's us. If there's one thing that America has long been famous for, it's our long-standing love affair with cars. Just ask anybody who has the biggest automobile market in the world, and the answer would just have to be the United States, wouldn't it? Well, as of now, that answer is dead wrong. Only 2 years ago, China's exploding automobile industry raced past Japan to become the world's number 2 vehicle market. Well, now, this year, China surpassed the United States to become, for the very first time, the world's largest market for new cars. China overtook the United States as the world's largest auto market back in January of 2009 when it sold more cars, 735,000 units, according to the China Association of Automobile Manufacturers. And as every investor knows, America's auto industry is desperately weak and on the verge of bankruptcy without any help from government bailouts. A near-term recovery in vehicle sales in the United States is highly unlikely as the recession and unemployment take their tolls on consumers' wallets. The Chinese auto industry now has America in its rearview mirror, and the U.S. is really unlikely to regain the lead. Vehicle sales in China rolled 6.7% to 9.3 million units last year, and sales may grow another 5% this year, and that's considered sluggish by Chinese standards. Now, although China is growing while the U.S. is shrinking, the China Association of Automobile Manufacturers acknowledges that the latest figures show the slowest pace of growth since 1998. In fact, recently one investor wrote us and asked us why we're not more interested in making investments in this booming auto industry in China. Well, the answer is pretty straightforward and requires some understanding of the conditions in mainland China. To describe the situation in a nutshell, the Chinese auto industry looks much like the U.S. auto industry did back in the 1920s and 30s, when America was making Packards and REOs and countless other now extinct brands. In fact, China currently has more than 80 car companies, and an industry-wide shakeout is inevitable. Predicting which of these 80 companies are going to survive the battle for dominance in the industry is pretty much impossible, partially because Chinese provincial governments are major stakeholders in some of these failing enterprises, and they're going to use bailout funds from their provinces to prop up these companies. So, we don't know which of these companies is going to be the survival of the fittest. Anybody who's visited China recently would have noticed that BMWs and Volkswagens, Toyotas, and GM brands tend to dominate the roads in every major city, and all foreign automobile firms operate in partnership with Chinese enterprises. But in the countryside, cheap and undependable brands are popular because you can buy a new car there for less than $8,000 per vehicle. And it's a very messy and unpredictable situation. So does this mean that there's no investment options with regard to China's booming auto industry? Well, not at all. There are a lot of industrial sectors that are a lot less fragmented than the auto industry that we can look to for a dependable profit. And we're always looking for safe ways to play the China auto boom. So tune into future issues of the China Stock Digest, and until then, I'm Jim Trippon with China Stock Digest.